Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com. You know the drill. We've been here for over 21 years providing the best technical analysis and trading systems on the planet. Anyway, wasn't planning to do a new video today, but with the absolute market carnage, figured I needed to. You can see this graphic, absolute bloodbath on Wall Street today. By the way, in case you're wondering, I generated this on AI. Kind of funny, it looks like the AI was inspired by The Walking Dead or something. But again, absolute crazy day. Here's the heat map. Obviously, pretty much everything's bloody red. Bloody red. UNH was up, but it's been down a ton. And some other interesting facts. The Dow Jones was down today again. That marks the 10th consecutive down day in a row. Okay. How often has that occurred? Well, over the last 100 years, I wrote a scan. It's occurred 8 times. The last time was October 3rd, 1974. Now, in case you're wondering if we have another down day, that has occurred 5 times in the last 100 years. 12 consecutive days has only occurred twice. One in 1968, one in 1941 after the Pearl Harbor bombing. And 13 days and beyond, it's never occurred. Anyway, this is our backend recorder for our website subscription service. I'm going to go ahead and get that recorder started now for our subscribers. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, December 18th newsletter. Happy holidays, but boy, today didn't seem like a great holiday, did it? Today was an absolute bloodbath for the market. Absolutely nowhere to hide. Well, the things that were up today were the US dollar and yields. Okay. Otherwise, pretty much everything was absolutely shit canned. All right. So massive down day. The S&P 500 down 3% or 180 points. Dow Jones down 2.6% or over 1,100 points. NASDAQ down 3.6%. IWM small caps down 4.4%. All right. I know a lot of people didn't think something like this could happen before Christmas, but hey, anything can happen in the markets. That's one thing you got to remember. We have 7 days left now until Christmas. As you know, we had the FOMC today. The market was widely expecting that fourth point rate cut, which is what happened. But there were a lot of folks that were expecting the Fed to be hawkish, and that's exactly what they were. They lowered the expected number of rate cuts down from 4 to 2, but boy, did the market absolutely get annihilated on that. Okay, like I said, the S&P 500 dropped about 180 points after that. So big down day. And Steve and I have been discussing the last couple weeks the sheer negative breadth in the market. It was very narrow. Basically, the narrowest market we've ever seen. It was just some of the large cap tech stocks that were leading everything. And all you had to do was go look at the various market sectors, and most sectors were trading down and have been trading down. We've been showing charts like the NIMO, the McClellan oscillators. And one thing you learn in the markets is that eventually those things matter, and it mattered today big time. All right. Again, we'll go over things here tonight. I'm not adding any trade ideas, obviously not in this volatility. We did have some mean reversion systems trigger today. The SPY breakout system finally closed out of that trade, hit its stops, and some new mean reversion systems went long. Okay. Otherwise, again, we had the FOMC today. Friday, we have the PCE inflation data. Okay. And here's the image below that I generated on AI. Shows Wall Street bloodbath. It's pretty cool what you can do with AI these days. It looks like it was made from or inspired by Walking Dead or something, but pretty cool. Next, let's go and jump to these charts. So the first chart below here, item number 2, here's a chart of the Dow Jones. I've been showing this channel, this wave 5 up here. Well, the Dow, and it's been getting news, it was down many consecutive days in a row. The last time I did a video, it was down 8 consecutive days. Yesterday was 9. Well, today you can see it sliced right through this uptrend channel. It lost that demand zone, and today is number 10. So the Dow Jones has now been down 10 consecutive trading days in a row. So that's quite stretched. It's quite rare. So I wrote a scan so I can test this. I don't like to just go out there and Google and try to find what other people say about stats. I like to see the stats for myself. So I wrote a scan and I tested over 100 years and 10 consecutive down days. This has occurred 8 times in 100 years. So the last time was October 3rd, 1974. So, about 50 years ago. Then it was 1971, 1968, 63, 1960, 1941, etc. Probably around that World War II. Now, there's been 11 consecutive days. That's occurred 5 times in 100 years. Okay, so just because we have had 10 days doesn't mean you can't have another day. So that's occurred 5 times. Also, 1974, so October 4th instead of October 3rd, obviously. 1971, 1968, 1960, 1941. 12 consecutive days has only occurred twice in 100 years. 1968 and of course that 1941, and 13 consecutive down days and beyond has never happened in 100 years. Okay, so we're likely getting close to some sort of oversold bounce. There's a demand zone. We lost this small demand zone. There's another demand zone down here. I think we'll get a bounce somewhere soon or around there. That said, guys, given the big sell-off in the market and everything, I think there's a really good chance we have a pretty nice top in place. I am looking for an oversold rally, but I think it's going to form a lower high. So we'll likely get some sort of oversold bounce sometime here into Christmas, but likely that rally will eventually fizzle out and form a lower high. So on the Dow Jones here, this channel that would be a resistance area, a good place to short, or an objective area to short. Next, chart number 3, here's the heat map for today. Again, pretty obvious. One of the big spots today, the bright spots, was UNH. But, UNH has been all in the news with the CEO getting assassinated, and it's been down. So it actually bounced back today. But everything else, bloody red, as you'd expect. Next, chart number 4, here is the NYMO. That's the NYSE McClellan Oscillator. Steve and I have been showing this for a while. While the market was going up or holding up, this was just plummeting. That was very strong negative breath. We've been talking about that. So again, this has been building here, guys, for a couple weeks. Anyway, it did close below its lower Bollinger Bands today. And typically when the NYMO or NAMO McClellan oscillators close below the lower Bollinger Bands, many times you get a bounce. Again, sometimes you need 2 or 3 consecutive days below the bands. But the fact it closed below the Bollinger Bands, it's very oversold. It's back to, April levels, likely due for a bounce here at any time. Next, image number 5. So here is 2 of the McClellan oscillators on one chart. The NAMO, that's the NASDAQ equivalent, and it also closed below its lower Bollinger Bands. And the NYMO, of course, at the bottom. And I'm using a histogram chart, and you can see how it's buried below the lower Bollinger Bands. Okay, but again, you can see on this nice clean histogram how it was just melting down here while the market was holding up. Finally, image number 6. Here's another chart we've been showing. This is the SPY versus the RSP. That's the equal weighted. As you know, these indexes are so weighted with, most of these 5 or 10 large cap tech stocks like Apple and Google and Tesla, Microsoft, stuff like that. Well, if you take the weighting out, that's when you get the equal weighted. Well, you can see here, again, they obviously follow together, but at times you get these divergences, and you really had a huge divergence. This thing was just melting down while the regular S&P was holding up here. So finally, again, in our experience, when you see stuff like this, it can happen for a while, but eventually, it eventually plays out, and it did in a big way today. Next, chart number 7, here's the VIX. Well, The VIX, I talked about this a couple weeks ago, the Bollinger Bands tightening. That meant a bigger move is coming. And so I've been on the lookout for this. Well, the VIX had a monster rally today, up 74%, closing well above its upper Bollinger Bands. That said, the next time the VIX closes back inside the bands, that could be a buy signal. But boy, big move in the VIX. And here's the 60-minute chart of the VIX. As you know, I've been showing this with these gaps. Well, I talked about this open gap up here from early November, and you could see just look at this move. Just totally blew that out. And look, guys, to be honest with you, I was looking for a big sell-off in the market, but I didn't think we would necessarily get it right now. I was looking for a little bit of sell-off, but then after the Christmas rally into the new year, then I was looking for this big market sell-off. I didn't think we'd get it right now. That's when I thought this big gap here on the VIX would get filled, was sometime after Christmas. Well, I guess too many people thought the same thing, and boom, it ended up being filled right now. And finally, chart number 9, here's that chart I've been showing as well. This is the comparison of the S&P 500 to the Indian Stock Exchange, the Nifty 500. And again, I know that might seem like an oddball thing, but if you look here at this weekly chart, the two tend to move lockstep together. But, divergences show up time to time, like you see here in late 2021. S&P formed a lower high, or the Indian Exchange formed a lower high. The S&P formed a higher high. That was a big warning for the S&P, and boom, we had that big bear market in 2022. Well, you can see this divergence, very obvious divergence been building here. Nifty 500 had a very obvious lower high, while the S&P had a higher high. And I said this is likely to play out for a big sell-off, especially in the next year. Well, it's starting to play out right now. Okay, before we get back to the general market, let's talk about some of these systems. So today the SPY breakout system closed out. It did make profits, it had stops, and etc. That said, some new mean reversion systems took entries. So on the SPY side of things, again, if you happen to be new here, we have 21 mean reversion systems that we run across both the SPY and ES futures. Okay, I run it across both instruments because, you'll get different trades, even though they're obviously, almost the same thing. So today, the QEBTS and the trend pullback triggered first entries on the SPY ETF. You can see it right here. And on MES futures, unfortunately, yesterday, the trend pullback triggered a first entry. Not a great entry. That system can be early at times, which it was. Well, it took a second entry today. And this is a great example. So this is the same system, the trend pullback. Well, it triggered on ES yesterday, but it didn't trigger on SPY. SPY had a better entry today. And, well, and other times, ES might have a better entry. So it's kind of back and forth. But anyway, during strong market corrections, sometimes you can see, 2 or 3 or 4 of these mean reversion systems start taking trades and multiple entries. So depending on what this market does, we could see more systems go long. They are what they are. Mean reversion systems, especially if you're new to them, they can be emotionally tough to trade because they buy when it feels like death, right? The average public doesn't feel comfortable buying a big sell-off like today. Okay, so they buy when it feels the worst, but ultimately they make money. They have about 90% winning trades, but they buy when it doesn't feel good. Okay, I guess that's the best way to say it. They buy when times don't feel good, but ultimately they play out. All right, so I'll keep you all posted on these and let you know when other new systems, if they go long. And image number 11. So here's a little table that shows you what's currently open. We have the SPY systems open here, the two systems, QEBTS, trend pullback, and of course the ES futures has the trend pullback first and second entry. And finally, here's some of the stats for those particular systems. So here's the SPY trend pullback system statistics. Profit factor of 20, that's a very good profit factor. 153 total trades, 90% winning trades. This goes back to the 1990s, so it has a long history. Average time in trades about 11 days. Okay. And image number 13, here's the SPY QEBTS system statistics. So profit vector 9.9, still decent, about 85% winning trades. 213 total trades, so it's more active. This also goes back to the 1990s, and it has a really nice profit curve here. This one average time in trades about 6 to 7 days. Okay, so decent stats. Again, sometimes these systems can require 2 or 3 entries if the market has a really good sell-off. All right, right now they have first entries. Okay, moving back to the general market. So item number 14 shows the index sector table, what transpired today and this week. Like you see here, bloody red. Look at those sell-off on those indexes. Down anywhere from 2.5 to 4.4%. Massive day, massive down day. And as far as the sectors, the 21 market sectors, like I said, 90% down day. All the sectors down. And look at these sell-offs for the week. Now, what are the bright spots you see here? US dollar had a big day, 1.2%. By the way, the dollar rallying, guys, this could eventually cause, some of these large cap or large stocks, large companies, international companies to lower their earnings expectations because of that strong dollar. So that's something to be aware of for future earnings. Bitcoin also finally pulling back. That wasn't spared as well. Remember that hit 108,000 recently. It's now back down to about 101,000. Commodities mostly down as well. Some green here. Natural gas up slightly. Agriculture DBA. Grocery prices essentially. That's up. Coffee up. Precious metals bloody red. Remember, we've been bearish shorter term on precious metals anyway. We've been stating that a high is in. We're looking for, a good ABC correction. So that's unfolding. Obviously, the rally in dollars helping that. But long term, this is in a bull market. So I welcome the correction here. But nice sell-off here today. And as far as the bond market, like I said, big move up in the 10-year, 30-year Treasury yields. Big moves there, guys. Next. Item number 15 shows the economic news calendar. As I said, we already had the FOMC today. The reaction to that. Tomorrow we have initial jobless claims, GDP, home sales. Friday we have the PCE prices, core prices. So in more inflation data, we'll see how the market reacts to that. Okay, let's jump to the index chart. So chart number 16, here's the chart showing the 5 key major index. Like I said, the Dow's been downtrending here. Today marked 10th consecutive down day. See, closing below its lower Bollinger Band. So it's been weaker than everything else. But look at these candles, guys. Boom. S&P down below its lower Bollinger Bands. Nice sell-off in the NASDAQ. The Russell, big sell-off here as well. Next, chart number 17, here is the Dow Jones. I already discussed the 10 consecutive down days. So we lost this channel, right? There is a little demand zone down here, which we closed into it. So I do think we're going to bounce somewhere around in here. Whether we go down a little bit more tomorrow or not, we'll see. But we are getting close to Christmas, which is next week. So I do believe we're probably going to bounce somewhere in here. Now, that said, on a good bounce, guys, this broken channel line is resistance. In fact, that would be an objective short. I think this high is in. I think any good rally is going to form a lower high at this point. Okay, could be wrong, but that's what I think. Next, chart number 18. Here's the UDow. That's the triple Dow ETF. Again, if you wanted to try to play a mean reversion bounce, you could play this. Obviously, today, huge down day. So if you bought it yesterday thinking it was oversold, you got smashed. That's why you got to use stops. But there is a demand zone here. Again, we'll see what happens tomorrow. Obviously, the 200-day moving average isn't too far away now on both of these. Next, moving on to the KISS systems. Chart number 19, here's the KISS S&P 500 Daily High Performance System. Oh, let me refresh this. Here we go. I refreshed this. So here's the S&P 500 High Performance Daily KISS system. Again, you can see, Remember, it's been long since early August there. It obviously hit its smart trailing stop today at 59.50. You could see about midway in the down candle. So it is now back to a flat condition. Again, KISS system did its job. Got out at its stop, protecting your profits, especially if you entered back here when it went long. So it is now flat. Next, chart number 20. Here's the NASDAQ Triple Q's High Performance Daily KISS system. This obviously also hit its smart trailing stop today at 520.52. Okay, so if you've been following those systems, you would have had your stop in place. Remember, the high performance systems, they use the stop intraday, not as a closing basis. Okay, again, KISS systems doing their job. Obviously, a lot of the KISS systems, remember, they're long only. A lot of those closed out today just because of the absolute carnage. All right, let's move to the S&P 500 chart. Chart 21. Here's the weekly S&P. Again, big sell-off here. We had a couple little doji candlesticks up there, so big sell-off. You can see the uptrend channel. You can see this MACD divergence has been building for much of the year, and you can see how far down the lower channel line is. Okay. Next, chart number 22. Here's another weekly view of the S&P. Remember, I've been showing this version. I said one of our accounts was having a high here as a wave 5 of 3. And I said we were looking, at least for next year, a pullback of a wave 4, major wave 4, possibly 500 to 900 points. Well, maybe that has started. Okay. Again, there's other counts that would have this total count completed. But this is one count where you'd have a big wave 4. All right. So maybe that started. Next, chart number 23, here's a daily chart of the S&P. Again, you can see we had that supply zone where price was stalling at, right, early in the week, last week, and boom, look at that candle today. Absolute monster candle, and losing the channel line, closing into this next demand zone. Now, if this doesn't hold, guys, there is another area down here, which I don't have marked. There's an open gap from back here in early November, down around that 5,800 that could be a target short term. Next, chart number 24, there's another daily chart of the S&P. You can see we sliced that uptrend channel, or uptrend line I've been showing. One count would have had this being a wave C high up here. Anyway, big slice today. The broken uptrend line, etc., is now resistance on an oversold rally. Next, chart number 25, here's a 2-hour view of the S&P. We've been showing this wedge-like pattern. Well, obviously smashed down today. Again, look at that candle. Notice the gap here. I highlighted the gap. These gaps are often magnets on the indexes. And so if we get another sell-off tomorrow, guys, this could be a magnet. Now, if we get another sell-off tomorrow, I think we could then likely start to bounce soon, sometime into Christmas. But boy, ultimately, I think a good rally forms a lower high, would be a shorting opportunity. And chart number 26, here's another 60-minute chart showing that wedge. And chart number 27, here's a 15-minute view. You can see how we had this coil set up. Well, look at that smash down. Just absolute waterfall. Next, moving on to the NASDAQ. Chart number 28, here's the weekly view of the NASDAQ. So far down 2.65%. Remember, NASDAQ Big Tech has been leading the market. It's been so narrow range. But I've been showing this channel pattern for many months, this potential wave 5 we're working on. The MACD divergence building. We're still above the 9-week EMA. Next, chart number 29, here's a daily chart. Again, huge down candle. Still holding this uptrend line for now, but that's eventually going to be lost. Next, chart number 30, here's a 2-hour view showing a wave count we've been showing. We've been showing this 5 waves up here. Whenever you have 5 waves, especially if you have MACD divergence, RSI divergence, you always want to be cautious, okay? Well, that finally played out. Big sell-off today. We filled that little gap there. Now the bigger demand zone, if you lose this trend line, uptrend line, is down into this range, down around 511 to 502. And chart number 31, here's another 60-minute chart. Again, shows you the same thing essentially. I talked about the wave 5. Well, that ended up marking a high, lost the channel here, filled this gap, and we could see the bigger demand zone below. All right. Now, let's take a look at some of the big cap tech stocks that have led this market. So they obviously sold off today as well. Here's Tesla, which has been absolutely on fire. Sold off for now, bounced off its 9 EMA. So Elon only lost, whatever, 50 billion or whatever that means. His fortune, I think, hit 500 billion up here at the highs. Just absolutely crazy. I assume, Elon will be the first trillionaire one day. Here's the weekly chart. Remember this big bullish weekly coil we showed early in the year? Well, that obviously played out. But now on the weekly, you have a big spinning top doji candlestick. Chart number 34, here's Google. Again, got smashed today as well. Again, all the techs sold off. Here's Amazon losing its 9 EMA. 20 MA is below. Here is Microsoft, big smash down. You can see the lower trend line of the coil could be some support. And chart number 37, here's Meta, big sell-off as well. Back testing the broken channel line. And here is Nvidia. Now, Nvidia has been weaker. Remember, it lost its uptrend channel back in November. I said to watch for resistance on a back test of that channel, which is exactly where it stopped. Sold off. Now, it did bounce off the top of that bigger demand zone yesterday. Obviously, smashed today. And here is NVDS. That's the inverse ETF for Nvidia. Remember, it's been shown it come out of this base. Honestly, this still looks pretty good. Next, chart number 40, here's IWM small caps. Absolutely pummeled. Remember, lost his 20-day moving average back here. That was not a good sign. Well, then it was down to the 50-day moving average yesterday and then just absolutely got smashed. And here's the 2-hour review. Again, lost this uptrend line. There was a little demand zone here, which obviously it blew through all that. And it got it back, and it got down into this next demand zone down in here before bouncing slightly. So there you go on the indexes, guys. Now on futures, futures are up just slightly this evening. ES futures are up about 7 points. So, that's not much of a bounce considering the carnage today. Moving on, chart number 42, here's the US dollar. It had a huge up day, and it's actually up here again in after hours. Like I said, dollar's had a big rally off this wedge from the September lows, the fifth wave bottom we pointed out. Remember, anytime you see 5 waves, you want to look for a reversal, right? Anyway, the strong dollar, that's affecting a lot of things. And like I said early on, that could start affecting negatively the earnings of these larger stocks that sell internationally because of that strong dollar. Here's the weekly chart of the dollar. Remember, it found big support back here in September. And then this trend line here I've been showing has been held as support. It's rallying up again. The other strong area today was, unfortunately, the 10-year Treasury yield. Okay, strongly correlated to mortgage rates. It bounced off that demand zone a couple weeks ago that we had in place. Well, it's just been moving up strongly since. That's not good. And here is the 2-hour review. Remember, in my newsletter a couple weeks ago, I talked about the 5 waves to the downside here. And anytime you can count 5 waves, as I always state, look for a reversal. Well, we got a big old reversal out of there, and man, all the way back to its highs. And chart number 46, here is high yield corporate bonds. The market tends to follow this. Well, it is melting down. Lost its 50-day moving average today. You got an uptrend line here, but this is not looking pretty, guys. Moving on, let's look at the market sectors here. So here is XLK Technology. Now, we've been showing this as a rising wedge for months now. Well, this playing out finally. Again, this is very obvious wedge here. You had the MACD divergence. Everything was really a textbook. Big smash down today. In fact, here, one target, and it doesn't have to do this, but a measured move would be taking the back of the wedge, adding it to the top would be a symmetry. Notice how it would conveniently measure down there to the 200-day moving average. Chart number 48, here's the semiconductors. They tried to bounce a little bit the other day, but boy, they got smashed back down today. Now, as I stated, besides the tech area that was holding up, all these other sectors have been selling off. Here's the banks. They've been selling off here for a good 3 weeks. Big sell off today, obviously. Look at that candle, losing the 50-day moving average. There's an open gap here, so this could still see more selling. Charter 50, here's XLF Financials. Kind of had a little head and shoulder look there. Big got smashed down today as well. Charter 51, IYT Transports. Remember, they've been downtrending here for, since mid-November. They've been very weak. Big sell-off again today. Now the 200-day moving average is below. Maybe that will offer at least some initial support. Charter 52, XLB Materials. Again, this broke support over a week ago. And look at this, just melting down. Charter 53, XLI Industrials. This broke support, like I said, a week ago, this channel. So you see my point, guys. These things have been, many of those sectors have been downtrending for the last 2 or 3 weeks. So, like I said, this was building under the surface like a cancer. Here's XOV Healthcare. This has been selling off strongly since September. And let's take a look at XLE Energy. Well, I was kind of hoping XLE Energy would find a little support yesterday from that doji, but, well, nothing. Well, with today's action, that wasn't going to happen. Absolutely smashed down again. You can see energy's been selling off here strongly the last 3 weeks. And speaking of energy, here's the bullish percent chart, BP and ER. Just checking where this is. It's now down to 36%. Remember, these bullish percent charts go from 0 to 100%. So, other areas that have been absolutely pummeled are emerging markets. Brazil, here's Brazil. Brazil's been downtrending, losing a big support here. This is a weekly chart. And here is the daily chart of Brazil. Obviously, that rallying dollar is not helping Brazil, but Brazil's been downtrending for a while here. They also have a social government now, and, that's not, market's not reacting well to that. But, man, look at this. Just absolutely melting down. All right, moving to commodities. Here's DBC. That's the commodity index. Down today. You can see this coil here. Hasn't lost it yet, but not looking too pretty. Charter 60. Here's the weekly view, of course. It's been in this trading range for the last 2 years. Charter 61. Here's the CRB to SPY ratio. That's commodities to the S&P. I've been showing this absolutely beautiful falling wedge. Well, it's starting to move up. Right? What has this wedge been suggesting to us? And by the way, you can see 5 ways. Remember, 5 ways. Look for a reversal. Well, it's telling you that commodities are going to outperform the S&P. Now, today they were both down, but commodities underperformed less. But this wedge, guys, does not look pretty for the general market. Next, Charter 62. Here's crude oil. Now, crude oil held up pretty damn well today. Okay, you can see it's in this little coil here inside the larger downtrend channel. Charter 63, UNG natural gas, little bounce today. Again, remember, the big thing with natural gas has been this 200-day moving average, where it has stalled the last 8 times over the last year and a half. Charter 64, DBA, that's agriculture. Well, it was up yet again today. This has been uptrending nicely. It's not fun to see this continue to uptrend. You all know the prices at the grocery store. Well, that's exactly what this is. Moving to Bitcoin, Charter 65, here's Bitcoin. It obviously got hit today as well. Not as bad as the market, still holding that 100,000 mark. But one thing that worries me about Bitcoin, you have a pretty obvious MACD divergence here. So just be aware of that, guys. Here's one of the ETFs, IBIT. Again, you can see that MACD divergence there. Yeah, it's losing a 9 EMA. Now watch that 20. If it loses that 20-day, that could start a bigger selling down to the 50-day. So be aware of that. And here's the weekly view of Bitcoin. Now, one thing to realize here, guys, what do you see? 5 waves. When you see 5 waves, you want to be out, look for a reversal. So, to me, I'm not super bullish on Bitcoin up in this range because of the wave 5. All right. Where was I bullish? I was bullish down here in the demand zone on the wave 4. But up here, that's when it's risky. Finally, let's move to precious metals. Here's gold. Again, it got smashed as well. Remember, I've been marking that last rally as a lower high wave B. Well, looks like we're now working on that wave C. Okay. I would love to see gold eventually work down, maybe to its 200-day moving average. I think then it would be a great buying opportunity. Gold, to me, isn't a bull market. But, I've been waiting. Ultimately, it's in a correction at this point, and I still think it has more to go. Next, chart 69. Here's the gold metal itself. Now, this candle doesn't show a big down candle like the ETF, but remember, guys, we have futures rollover, and so that's part of the reason. I still favor an eventual wave C down here. A longer consolidation before this is done. Chart 70, here's another chart of gold. Remember, we've been favoring this wave 4 correction. Now, once this is done, guys, like I said, maybe we get down to the 200-day moving average. I'm looking for new all-time highs in a wave 5, likely over the $3,000. So I'm itching for this to come down lower. I want to buy a bunch of it. Chart 71, here's silver, down today as well, bouncing near the 200-day moving average for now. And chart 72, here's silver on the bigger picture chart. Like I said, I like silver on the bigger picture. I think over time it moves much higher. And also, guys, on gold, it's possible we could see some short-term bounce here just because of the fear in the market that's now being generated. In fact, gold is up tonight pretty nicely. Again, not surprising. I think it's up looks like it's up about 30 points off its lows. Again, just because of the fear. But ultimately, I don't think the correction is done in gold. And finally, chart 73, here's GDX. That's the miners. Remember, this is in a correction as well. Initially bounced off its 200-day moving average in November. Stalled with its 50-day. Losing the 200-day again. I think at minimum it comes down here to its 618 fib, if not lower. Chart 74, there's the 2-hour view GDX. Remember, I marked that bounce as an ABC. Well, that ended up being the correct labeling. Filled that gap today as well and went much lower. And chart 75, here's the BPGDM. That's the GDX trading system. It's a very nice Rinko chart. Gave an excellent sell signal back here in October. Very timely in the overbought area. You can see it's worked down to about 53%. So it's in the mid-range. The next buy signal on this could be a decent buy signal, but it still may work quite a bit lower. All right, guys, that'll do it. We'll see what happens tomorrow, but crazy day. Again, I knew something like this was coming. I just thought it would be after Christmas, but it is what it is. The market was unsustainable the way it was, that negative breath, and it was only a matter of time. All right, guys, enjoy the rest of your evening. Take care, and thank you for all your support.